on 18 now. Yes, Bank, the numbers are out. We're just going to get them addressed in just a bit while we await the numbers. There you have it. We have the net profit, which has come in at 1,180 crore rupees. It's still, as of now, indicating only agencies. So we'll wait for the results to be uploaded as well on the exchanges. But 1,180 crores, if I have to put that against what the preview was mentioning, and let's just figure out whether it's coming above or below. It's definitely coming above expectations, and you are seeing the stock as well react rightly so to that, because the net profit that we were expecting was at about 1,065 crore rupees. So it has managed to beat expectations for now. Net profit at 1,180 crore rupees. Sharp spike as well seen on the stock price. There we have it. The NPA figure as well has actually come in 1.28% versus 1.72% on a sequential basis. It has actually shown a compression. A bank showing a compression. When it comes to asset quality, well, certainly you're going to see the street give that one a thumbs up. That's what we are seeing. Yes, bank at the day's high as we speak. Currently, I still don't see the numbers actually on the exchanges.
Oh, yes.
But
we just have the GNPA and net NPA figures. Even the net NPA has some good news to offer. Down clearly on a QOQ basis, it's come in at 0.64% versus 0.93%. Of course, asset quality lowering is very good news for the company, for the bank, and we are seeing the stock trade at the day's high point. Apart from that, NIMS is something to watch out for. What our poll was suggesting is the fact that NIMS will be stable on a QOQ basis and improve on a year-on-year basis. So that is one figure to watch out for, and hopefully we'll have it for our viewers very soon. What the poll also suggests is the fact that the fee income would be healthy. NPAs, in fact, we were expecting to inch up on a QOQ basis. Clearly, that has not happened. It has been a beat on that front, and that's why we're seeing the street give a thumbs up. We also have the figure of, PAT, we've already highlighted, 1,180 crore rupees, higher than what we had anticipated. Management commentary is extremely important to watch out for. We will have a press conference soon where the management will hopefully talk about the impact of Feb 2018 circular, the trend in NIMS, NPAs, guidance on credit costs, of course, also management seeking board approval for capital raising plans. That is something also extremely key to watch out for. We also have the net impact of FY17 divergence, which is reflected in the FY18 results. That is an update that we have at this point of time. NIIs have come in at 2,150 crore rupees versus our poll of 2,032 crores. So a beat on that front as well, albeit marginally. We have a guest on the phone line right now. Mayuresh Joshi is joining us to decipher what this means for Yes Bank. And Mayuresh, clearly a beat on an NII as well as profitability. The asset quality has shown a good improvement. What is your first cut reaction? Is it in line with what you had expected, or have they actually exceeded what your estimates also said?
Good afternoon, Karin. Again, I think on certain parameters, it's obviously exceeded our expectations. So in terms of how the asset quality has largely panned out, we were probably expecting asset quality to remain stable on a quarter-on-quarter basis. But as I see on the ticker, it's probably looking better than what I was expecting. The second element in terms of NII growth, tad bit better than what I was expecting at this point of time as well. Around 25-26% is what my expectations were. So that is also a tad bit above in terms of my readings. So largely, yes, I think the first cut probably suggests that asset quality pain and pressures, as the management had indicated, are easing out, specifically in terms of the new RBI circular, where the management was very, very confident that the impact will be very, very marginal in terms of reported numbers. And obviously, I think this entire effect has trickled down to the bottom line. So I think the bottom line also better than what we had probably pegged around 1125 odd crores.
We're also joined by Rakesh Sarve, the head of research at Reliance Securities. Rakesh, while the numbers do look like a beat on the NII and bottom line, what I do want to flag off is the divergence. In the press release, the divergence in gross NPAs has come in at a whopping 6,300 crore rupees, and the net NPA divergence is at 4,800 crore rupees. This certainly does make the provisioning figure more or less moot when it comes to Yes Bank's reporting.
Yes, obviously, means divergence is more than what was expected. 6,000 crore is a lot of divergence. So people will have to wait for the clarification which will come in either in the conference call or the press release or the press meet which they do. But overall, the numbers are quite good. Means we had expected something like 1,000 crore of profits. Means the street was expecting something like 1,000 crore. It has come at more than 1,100 crore. So these are good numbers. Reported asset quality numbers are also excellent. Credit cost is at less than 100 basis points, 76 basis points at 2018. So these are extremely good set of numbers. But the divergence thing has to be explained by the management, which will obviously be done in the conference call. Divergence is more than what we were expecting in these numbers.
So Rakesh, earlier too we have seen stock reacting negatively to the divergence figure. How should one read this? Because there has been a lot of negative reaction when it comes to divergence, and stock has. What's your in-house call on Yes Bank? What is your recommendation from valuation perspective as well as how the results have panned out and asset quality?
As I said, results are good from our perspective. What we had expected, the results are better than that, even on the asset quality front. The reported asset quality is much better than what we had expected. Divergence bit has to be explained. Divergence is more than what we were estimating. That's one thing. Stock, we have a buy rating on the stock in Yes Bank. We will continue to maintain that. We'll update the numbers post the conference call and talk with the management.
Okay. Mayuresh, I just have the NIMS figure as well. It's come in at 3.4%. How are you viewing this one? Because this as well was a key parameter that most in the street were watching out for.
No, again, if you look at the NIM that was reported last quarter, obviously it had a proportion of the quasi capital raising that they did via bonds. And then there was also the securities issue, which actually dragged NIMs by 20 odd bips. So again, I think the street was largely expecting NIMs between 3.4, 3.5. So again, I think more or less in line with estimates as I see it.
Okay. Okay, all right. That, of course, is in relation to the NIMS. I just have a couple of more details given on asset quality. They've written that adequate provisioning on account of exposures to select accounts has already been made. They have a total exposure of about 319 crore rupees in the first list that was, released by the RBI, both classified as an NPA with a provision coverage of 50%. And they're expecting, in fact, a 60 to 65% recovery from the first list. The second list, they had 650 crores of exposure across 7 accounts, and they have adequate provisioning once again with 50 to 60% collectability. So that puts the total exposure to the RBI list accounts at about close to 1,000 crore rupees, close to about 1,000 crore rupees. Rakesh, would this be a point of worry or anything for you?
No, this is as per expectation. I don't think this is more than what people are expecting, and they are saying that it has been provided adequately. I'm reading that press release, so I don't think that is too much of a issue over there. What the issue is, the divergence. 6,000 crore bit of divergence is a little on the higher side in our opinion.
Important update, that the street was keenly wanting to know is the fact that what the fundraising plans are for Yes Bank, and they've come out with an update on that as well. The board is okay raising up to $1 billion worth of equity capital. Poonam, my colleague, is also joining us now. Poonam, what are you making of the numbers?
I would say good numbers, Karunya, in terms of the results. We are seeing margins dip nearly around 10 bips quarter on quarter, but again, pretty much above in terms of the net interest income. Profits also is slightly above our own estimates. Provisions have come down during this quarter, although yes, on a QoQ basis, the provisions are down. On a YoY basis, the provisions have gone up. You're seeing an improvement in terms of the GNPA. But yes, I would agree with all the commentary that I was just hearing. We do need some amount of further clarity in terms of the entire divergence. Just reading a little bit in terms of the divergence, we're seeing the total divergence itself at 6,355 crore, wherein the management has commented that there is net repayment in part of full to the extent of 2,400 crore. There's an account that has been sold to the ARC for 800 odd crore, and as a result, the outstanding as on 31st March earlier was 3,100 crore. There is one account which has got upgraded as standard on account of satisfactory conduct, which stands at 2,600 crore, and one on account of nearly around 485 crore, and as such the entire divergence now stands at 6,355 crores. So, yeah, further clarity in terms of this entire divergence and what exactly does this mean really for Yes Bank would be fairly important. Having said that, overall, these are really strong numbers again for Yes Bank. We're seeing a fairly strong CASA ratio also at 36.5%. The credit cost itself is just about 13 bips during this quarter. Fairly strong loan growth of nearly around 54 odd percent, deposit growth of 40%. So, other than some clarity in terms of the divergence and the overall asset quality, I think these are really good numbers. And if I'm not mistaken, I even heard that there's $1 billion of capital raising that probably the bank is planning. So, further clarification on the same, or is that they're just seeking an statutory approval on the same? That will be fairly important because they have recently raised capital. So, clarification on that and asset quality, but otherwise these are good set of numbers.
Really, Street is liking the numbers, and stock is already up by 3.5–4%. Thanks, Poonam, for joining us and throwing light on the numbers. That's all we have right now in Market at Lunch. Riding the Bull coming up next with my colleague Ajay and Avantwash.